income and a statement for a non-profit organization. So this is a question from the book from page 204 in your activity book. Now this is a bit like the trading profit and loss that we did before for a business, and finally a balance sheet. So they call it here an income statement. So before we call this a trading profit and loss, and a statement of financial position, which we call a balance sheet. So we're just going to go through the layout and the similarities with what we've done before. Now, first of all, this is for a non-profit organization. So you have somebody here and they ask you about a treasurer. So this is the person who manages the money. So you may have heard of scandals at the moment with the Football Association of Ireland. They're not meant to be a business. They're a non-profit organization trying to encourage people to get involved in soccer. And they have somebody there called a treasurer who's managing their money, and obviously they're not doing a very good job at it with all the stories in the news at the moment. So that's what the treasurer does. So the treasurer makes sure that the accounts are properly recorded. So let's see what information we have in the question and where do we put it. So first of all, let's look at the three parts of the question that you're asked to do. So you're asked to do a shop account, an income statement, and a statement of financial position. So if we start with the income and the statement of financial position. So the income statement, this will be done in Record Book 2 the way we did this before. So with a company, you would have had sales less cost of sales expenses. This one here is a little bit different, a little simpler. We just have incomes, money in, and expenditures, money out, and then we're going to take the two of them away. The statement of financial position, that's like our balance sheet. So we have fixed assets, current liabilities, and financed by, the way we had before. Now, with this, the only major difference we have, let's say to start with, is this income statement. We're not designed to make a profit. It's a non-profit organization. So the money, the number that you have at the end, instead of calling it profit, we're going to call it surplus. Whatever surplus we have at the end of our income is going to be put into the financed by for the instead of capital. We treat it, let's say, like we would have treated retained profit that we had before. So back to this. So first thing is, the first document you have to do is a shop account. So this little business, okay, it's called the Ring Development Group. It has a shop, and the shop makes a profit. And that profit is going to be one of the incomes, one of the ways that this organization, this non-profit organization, makes a little bit of money for itself. So it has a little shop that tries to make money. So this is the same as a trading account that we had before. So you start off with sales, opening stock, purchases, takeaway, closing stock, and what's left is the profit of the shop. So where do we find these things? Well, financial details at the beginning of the year, it says there's opening stock of clothes and furniture. So there's our opening stock. We have our closing stock here, 1,800, that's the end. And then in here we're looking for revenue, so we're looking for shop sales, so shop sales 21,000, and some we're looking for shop purchases. Do I see any? I don't see anything on shop purchases, so therefore shop purchase in this case would be 0. So we'll put all that into our shop trading account, and whatever profit we make in the shop, we'll then transfer that across, and that will be one of the main incomes in our income statement. Okay, I know in the example in the book you might see revenue, but revenue is the same as income. So I hope that makes sense to you.